Welcome to the Transparent FX Academy. I'm Nick, and I'm a top author on TradingView with over 190k reputation points. In this video, I will be speaking about NZDUSD. Now, as usual, to keep the video as educational as possible, first, I will be covering the technical aspect for this market. Then we will be moving to the order flow by looking at the commitment of traders, so the COT data, which is essentially what hedge funds and the big players in the market are doing and how they're shifting their orders. And by the end of the video, by using a combination of these two different types of analysis, we will try to understand where we have the highest probabilities for the next potential move here for this pair. So this is definitely a video you do not want to miss. If you're new to the channel, make sure to subscribe. This is the place to be for high quality, free trading education. Now, without further ado, let's jump straight onto the charts. Starting here from the monthly time frame, what we can see is that at the moment, the market is testing a quite strong and significant monthly historical support and demand area. From here, in fact, all these previous rejections to the upside have been created, and at the moment, the market is testing the exact same zone once again. So there is an increased probability of seeing yet another rejection to the upside away from this level, as already happened in the past every time that the market was testing this exact same zone, which turned out to be a quite strong historical demand and support area, as we have just identified. We can also notice, if we look at in more detail the most recent price action, that the market seems to be creating a series of higher lows. However, at the same time, it has also been creating lower highs. So it's creating kind of this triangle formation from a monthly standpoint. And since now the market just tested the bottom of the triangle, the next logical step would be for the market to create a rejection to the upside. So let's keep all of this in mind and drop that on the weekly time frame. Now, from a weekly perspective, what we have to notice is that the market has just created this weekly M pattern. Now, generally speaking, after the creation of an M pattern, what you would naturally expect is for the market to create a rejection to the upside, to go and complete the pattern at the neckline, which is the previous support turned resistance from a monthly standpoint. This is a pattern that the market likes to create over and over again. After the creation of an M pattern, usually we see a rejection to the upside. In my experience, for example, we can see one here. We have an M pattern. After that, the market goes and completes at the neckline. So it's not every time, but in my experience, when there is such pattern, there is an increased probability for a potential push higher, or at least that is how I like to look at it. Now, from a weekly perspective, we can also notice how this area is indeed strong support. We can see how from here, all this previous push to the upside started. Again, here, the market rejected to the upside. At the moment, the market just tested this exact same zone once again, from which there is good probability of seeing a potential push higher with a potential completion at the neckline. Now, if we drop down on the daily time frame, what do we see? Now, from a daily perspective, we can see a massive rejection to the upside immediately after the market tested that support, which, by the way, is the same support that we have previously identified also on the higher time frames. We can also notice that at the moment, this structure seems to be at this area. In fact, there is a possibility of creating a potential inverted head and shoulders at this zone, because this level was acting as previous support here. Then the market broke below it, and now there is a possibility of a retest and a rejection to the upside, essentially printing the right shoulder away from this zone. Now, if we go and see what we have when it comes to the commitment of traders, so the COT data, which is essentially what hedge funds and the big players in the market are doing, and we look at the data precisely for the NZD, the first thing that we have to keep in mind is that if we're looking at the data for the NZD, we're actually already looking at NZDUSD, because all currencies on the spot are traded against the USD. And what we can see is that with the last reports, net positions have been massively increased. We went from having minus 16.7k net positions all the way up to having minus 2.1k net positions, showing how institutions have been moving aggressively to the bullish side for NZDUSD, therefore making it stronger. So let's keep all of this in mind and move back to the chart. And by the way, if you still haven't, make sure that you join my free Telegram channel, which you find linked in description, so you never miss new updates. Now back to the analysis. So from a daily perspective, as institutions have already been moving back to the bullish side for NZDUSD, since this area is supported, as we have already identified, in my opinion, there is an increased probability of seeing more institutional longing inside of this zone. So how would I approach a situation like this? Well, as usual, trading is reactive and not predictive. The monthly, weekly, and daily timeframes combined with the COT data, those are the best timeframes when it comes to the directional aspect of the market. However, when it comes to identifying early shifts in the trend of a market, the best timeframes for that are the intraday timeframes. So 4-hour and lower. Therefore, what I would expect is that if this market would shift from an intraday bearish to a bullish market at that point, I wouldn't be surprised to see a potential rejection to the upside away from this area, completing that weekly M pattern at the neckline. That definitely wouldn't surprise me. Now, if you want to learn more, I really suggest that you go and check out the transparentfxtrading.com website, which you find linked in the description. Here, you have the possibility to gain access to the most complete mentorship program ever. You have the possibility to gain access to all my courses, which will guide you from the basics to the most advanced topics like automated algorithmic trading using the NQL4 language. Then you will also gain access to the trading station software with a Telegram notifications integration directly on your panel. You will also have the possibility to have one-on-one mentoring directly with me, as well as having access to the COT data software, which is the one that you see me use very often in my videos. And if you continue to scroll down on the website, you will see that you have the possibility to join and gain automatically access with the email and password that you will create during the registration process. So I really suggest that you go and check it out as soon as possible. The link is in the description, and I will see you on your student dashboard. If you enjoyed the video, make sure to drop a like and also let me know in the comments below any new pairs or topics that you would like me to cover in the next videos. And I will see you in my next breakdown.